You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Hey, what's up, trader? It's Etienne Crete from Desire to Trade. Welcome back to the Desire to Trade podcast. This week for episode 54 of the podcast, I'm interviewing Chris Capre. And it's been a long time I've been trying to get Chris on the podcast. It took a while, but I'm really excited because this podcast is really going to be actionable in terms of psychology and mindset. Chris really knows how to apply psychology to trading and how to really make the best out of yourself as a trader. Chris also has a lot of knowledge about price action, which he shared a lot about in the podcast. You'll see that this is really packed, and you will probably have to take notes while you listen to the episode. Make sure that you stay until the end, because I'll have a special something for you guys. And on that note, if you want to reach out to me, check out the Facebook group at thisarttrade.com/group, and I'll do my best to help you out. Now the interview with Chris Capre. Chris Capre, welcome on the Desire to Trade podcast. How are you doing?
Very good. And yourself?
Very good, very good. I'm super happy today because it took quite a long time for me to get you in the podcast, but I'm really happy to have you here today. It's great.
Yeah, it did take a lot. There was definitely a lot of things going on in the last, year or so of my life, and so I know we've been trying to schedule it up, but it's worked out good now.
Awesome. So tell us about one quote that inspires you.
There's a quote on my About page that I think about a lot that I think that is representative of things that I've experienced in my life. It's by Theodore Roosevelt, and he says, "For those who fight for it, life has a flavor the sheltered will never know." And to me, that's very important because pretty much everything that I've had to create or build or, get in my life, I had to fight for in one way or another. And I often think that people are experiencing that, whether they're fighting something outside themselves or they're fighting themselves. And it's very easy to kind of go into our typical patterns. It's very easy to make the easy choice, the safe choice. But, very much what trading teaches us about risk, is that risk is important. And to be able to take risks, there is no success without taking risks. And so I think a lot of people, tend to go for the safe choices throughout most of their lives. My parents did, and I think it created a lot of challenges for them. And I think because of that, you're going to always limit your upside growth. You'll never truly break out into anything without coming out of the shelter and without really kind of pushing against forces and yourself to break out into something bigger and larger than what you are now. So to me, that's something that I always think about a lot, and it's something I remind myself of a lot.
Starting pretty strong. I love it. So tell us what you're doing these days exactly.
This is a very dynamic period in my life. There's a lot of adjustments happening. So as I mentioned before, I was, I've been living in Canada for, the last couple of years, and I was on the East Coast, so East Coast time zone. But now that I've moved back to California for a period of time, it's totally changed my trading in the sense of time zones. So, the New York Open or US starts open around 5:30 my time. And for me to really trade that, I do day trade and I do swing trading and I do position trading. And so for me to really do day trading, which I'd been doing, mostly around the US session for a long period of time, I need to prepare. I need to do my yoga, meditation, shower, and all that. And that's me getting up at, 3:30, 4 o'clock. And me being in my 40s now, that just doesn't seem as viable as when I first started out in my mid-20s. So I've had to make some major adjustments, do kind of a lot more portfolio trading and really kind of holding more swing positions at a time, doing some options, but then also shifting some day trading to the Asian session. So I didn't think, or I really hadn't had the opportunity to experiment with this because most of my trading was US and early and late London. So I've really found that there are some really interesting opportunities in day trading the Asian session. And so it's nice to slowly start getting these back up because day trading is one portion of my income. Swing portion is one, position is another. And so to not have that for the first month I was here was quite interesting. But I think I've kind of found a groove in, day trading the Asian session. And so I'm really surprised, but there's a lot more opportunities in there than I thought, and some really good instruments too.
Mm-hmm. But yeah, I'm really glad you mentioned this because this shows that we can really be mobile. Like we can go pretty much anywhere else we want and be able to trade any session, basically.
Absolutely. And there's even some statistical evidence that, retail traders actually do better during Asian session hours than they do in London or New York because of the volatility changes, and retail traders tend to do better when there's I don't want to say no volatility, but lesser volatility when there's more range-like structures. Trends seem to be harder for beginning or struggling traders to trust. And there seems to be, a lot of traders getting in late or not having the confidence or not knowing when it's going to end or, when it's turning. So range-bound environments tend to do better for traders. And so, a lot of the Asian session, there's usually an initial liquidity push once the market opens. But then after that, it tends to stabilize itself. And so there's some really interesting opportunities. But that's the beauty of trading. You can make money anywhere in the world, and you can make money while you're sleeping.
Mm-hmm. That's pretty cool. I just want to jump to that a little bit more. What type of time frame do you look for when you trade the Asian session?
So there's two things I'm really focusing on right now in terms of the Asian session. So one of them is the ASX 200. That's Australia's main index. And that index to me responds really well to key support and resistance zones. You get a very nice spread on it because there's plenty of liquidity happening during the Asian session on it. And yet it seems to be that it has very little HFT activity. There seems to be a lot less HFT activity during the Asian session and in the, particular Asian instruments than they are, say, US or London. So I'm looking for kind of momentum moves in that. I may play a structural range on it, but I'm generally looking to day trade the ASX. And then I'm starting to notice some patterns on, say, yen pairs, because if you think about it, there's a lot of yen liquidity that is happening simply because of carry. And so, you got all kinds of people who are trading just because of carry, whether they are people who are wanting a second equity curve, they have a position plus they want to get the carry, or there's, say, corporate hedging activity, basically, especially with the yen so strong these days. So I'm finding that there's a fair amount of volatility and movement in the yen pairs. Usually you can get anywhere from 30 to 100 pip ranges inside the Asian session. And to me, that's something that's very interesting and very exploitable.
Mm-hmm. Yeah, that's what I noticed because I've been trading the Asian session for probably 2 months now on like JPY pairs, and it works pretty great so far. So I'm pretty glad you mentioned it.
Yeah. And it's not just dollar yen. You can see some good movements in, say, Aussie yen and Kiwi yen. Euro yen is a little bit slow because there's a lot less euro liquidity happening during Asia. But Aussie and Kiwi, you got both instruments that are highly liquid and high amounts of flow happening during the time, just from Australia and just from Japan. So some really great opportunities out there. So I'm glad that you were able to tune into that.
Now, I want to go back in time, and I want you to tell us how you started to trade exactly. How did you get involved in trading in the first place?
Sure, it's a great question. So 16 years ago, I was teaching yoga for a living. That's what I was doing. And I realized, hey, I like teaching yoga. This is great. But I don't necessarily believe that this is going to be something that's going to build the financial future I want to do. Because there's certain things I want to do and create that require finances. And so they require capital. And it's not like I'm sitting there going, oh, I need the capital to buy a Ferrari. It's more of like, no, I need the capital to create these things. And so I started looking around for opportunities to build, abundance and build my capital and finance. And so I started looking at markets and I started investing in stocks and mutual funds. And that was interesting for, 6 months, but I'm like, wow, it's kind of slow. The market closes at a certain period of time and, there's no liquidity during off hours or very little. And so I started looking around for options. And during that time period, I was giving private yoga lessons to a friend of mine, Philip, who was dying of cancer. And he wanted to take yoga because he wanted his body to feel, as good as possible during his process. And, as I became friends with him, he started to talk to me about, things he did and just various business opportunities. And one day he comes up to me and he's like, "Hey, I want you to read this book." He's like, "I was reading it and I had this strange intuition that you need to read this because I think this is something you should do." And it was a book on currency trading. And so, I'd never had anybody tell me, "Oh, I think, I have this strange intuition that you should do this from a book." I've never had anybody tell it to me before and never had anybody since. And so, I kind of just listened to the moment. And so I read the book in 3 days. And, within that week, I was already, looking up ways to start trading FX. And so I opened up a demo account within a week. And a month later, I was live.
And how was the learning process? Did you succeed at first?
Yeah, I consider this a very lucky and rare story, which is that the first 6 months was a winning streak for me. And it wasn't just a small winning streak. It was, I started with $3,000 account, and in 6 months that was $83,000. Within my first trade, I had gained about, due to some really improper risk management, I was risking a third of my account on my first trade, and it just so happens that the trade crushed it for like 120 something pips. So, I was trading standard lots on a $3,000 account, which is insane. I would never do that today, but I didn't really understand risk management back then. So, I had gained like 124 pips. And so my account went from 3,000 to like 4,200 in the blink of an eye overnight. And by the end of the month, it was like, I can't remember, I think it was like close to 9,000. So, I just got off to a really good start. And, for 6 months, it was just, I was winning 70, 80% of the time. And I was winning way more than I was losing. So it was just it was a very interesting period to go on a 6 month winning streak, especially when you first start out and don't know a whole lot about the market. I consider myself a little bit fortunate, it was maybe beginner's luck. Maybe there's some other things, but very interesting start.
And then what happened 6 months after?
Yeah, this is another interesting story. So, account hits at 83,000 where, we're close to 84. And all of a sudden my brain and my mind starts to kind of think about like, do the numbers like, wait a minute, you just turned 3 into 83 in 6 months. Okay, let's assume that, in another 6 months you can double your account or triple your account. What can you start doing with that capital? And so, one of the things I started thinking was like, maybe I think I'm gonna buy myself a Lamborghini, and just pay for it cash. And so I started walking down Van Ness Avenue, which is in San Francisco. It's a main street, and they have all these kind of like Bentley and Jaguar and Ferrari dealerships, and the Lamborghini dealership was there. And so I was window shopping, and I was looking around, and I was getting prices, and I could have got one back then for about 180,000. So I'm thinking, okay, yeah, in 6 months I can buy this cash. And, and so that evening I went home and I was doing some trading on the London Open, and I lost $15,000 in like less than a half an hour. And within the week I was down 25K.
Okay.
So that created a whole new cycle. That was the end of that particular winning streak. And then it created a several month losing streak, which was the complete opposite, and kind of I don't want to say a crisis of confidence, but it really kind of shocked me psychologically. And so I definitely wasn't ready for it at that time. And it took me, several months to recover from that.
Mm-hmm. And then how did you went back up?
Yeah, another interesting story. So the losing streak, just, 3-4 months of just losing. I was actually at the point where I was thinking, wow, maybe I should do the opposite of what I'm thinking in the markets. And so, I just could not get a win. It was just very hard. And the wins I got were so small, and, it was a very interesting time period. So, I started to get, somewhat depressed. I was like, wait a minute, I had $83,000. A month later I had, 50,000 less. And towards, the end of this like losing streak, I was down to like less than $20,000, and so all this money had been gone. And so I was, getting somewhat depressed, and I was, really trying to I was questioning myself in every level possible, and doubting myself and fearful. And, I was sitting on a couch for staring out the window for hours, wondering what the F happened, And a friend of mine, kind of came in and he said, you need to get up off the couch. You don't look good. He's like, and it wasn't that I was sick. He's just like, you don't look good. You look bad. And so I went for a walk, and it was sunny that day out. And within 2 minutes of going out for a walk, it started raining. And I was thinking, wow, this is like symbolic of my life right now. And I was still in a bad mood. And you look bad physically when a homeless person walks by you and asks you if you're okay. So that's what happened. A homeless person I walked by this homeless person, and he looked at me. He's like, "Hey, are you okay?" And I was like, wow, I must be in really bad shape if somebody who doesn't have a home, who's sitting out there in the rain by himself, doesn't have like clothes and money to take care of themselves, is asking me if I'm okay. And so I was walking, and I just kept walking, and I got into this park, and they had this great flower garden there, and I was like, okay, well, something relaxing. And off in the distance, I see this person kind of moving, and I was like, what the heck's going on over there? And I kind of get a little closer to them, and they're doing Tai Chi. Tai Chi in the rain. And it's not exactly warm out at that time. And I was watching them, and this was clearly somebody who had been doing Tai Chi for a long period of time. They were showing like various moves and skill sets, and just there was a certain grace and precision that was happening at the same time that was quite impressive to watch. And here they are, it's cold and it's raining, and yet there they are in this kind of like storm-like environment doing, they're doing their skill set. They're graceful. They're practicing, they're training. And there was something symbolic about that for me. I'm like, look, about this person who is training and practicing regardless of things on the outside. That it didn't really matter to them. What mattered was, the outside didn't matter as much to them. It didn't determine their state of mind or their condition, that they decided to create their own, kind of energy, their own environment. And, so it really communicated, hey, you need to wake up out of this, and you need to train, and you need to be graceful and skillful and continue to work at things, whether the outside environment is supportive or not, whether your outer condition is supportive or not. So, and it just really spoke to me. I was just watching them like, there's no way they could learn this in 6 months or a year. This is something they've been practicing probably for a decade, or more. And it just reminded me of what can be accomplished with a lot of effort and training. And so that kind of woke me up out of my stuckness and my condition. And so I started to say, okay, well, let's start training at this. Let's start really training at this. And that was probably the biggest shift, that really started to correct my course again.
So then did you learn everything by yourself, or you had to take courses or possibly get a mentor?
Great question. So back then, this was 2003. And so, I don't know if you were trained back in 2003, but back in this time period, there was very little information available on the internet about trading FX. FX had just gone retail a few years earlier, and the internet and the web, had just started to finally, evolve and explode. And, back then there was 6 websites, 6 on FX trading. That's it. None of them offered mentoring. None of them offered any sort of training. So, I started to get books, and I started to do research, and FXCM had a training at that time period. And so I took that course, and I really wanted to kind of study and really train. And it gave me some good basics, things that I needed to, very foundational things that you need to know. And probably, 3, 6, 9 months later, my trading had started to stabilize and was doing pretty well. And because I had a good rapport with the people inside the course area, I got in contact with them, and said like, look, do you guys have job opportunities? You guys hire traders? Do you hire? This is my trading. Here's my account. Here's what I do. And I got a job interview, and they called me back the next day, and they said, yeah, we want to hire you, and we'll bring you out to Wall Street, and we'll pay for your travel and housing and all that, and come on out. And so that started my career as a broker.
Interesting. So then how did you move to retail trading after that?
Well, I never stopped trading personally, and so as my trading started to stabilize, I started to get, investors who wanted to, have me trade their money and manage money. That happened, from the very early on.
How did you get those investors? I'm just curious about how did you get them?
Yeah, no, great question. So back then, because I had no contacts in finance, or I had no, experience in that, I had no market, connections or anything like that. It was just people I know, it was people who I knew that had a certain level of abundance and a bit, interest in investing. And so I just said, look, here's my track record and here's what I do. And, are you interested? And so, it was very rudimentary back then. It was very inexperienced. And so, there's so many things that I did back then I wouldn't do now, and so it was, so I'd always been doing that. But, once I was a broker, I had to adjust things a little bit because, I had my brokerage work that I had to do for FXCM, and that, made it difficult for me to do a lot of my personal active trading off time, and so I had to do that off hours. And so, but that, the FXCM was a great opportunity because there was so little information about the market back then, and it was a chance for me to work with other professional traders and really just, become a sponge and absorb as much as I possibly can. And so I did everything possible I could for FXCM to learn as much as possible, to train as much as possible. I worked with several different departments, added on work with several different departments so I can learn different perspectives of the industry. I worked with gold clients. I, talked to the dealing desk regularly. I would always ask questions of my, my manager, who had an immense, just a vast knowledge of the markets. And there was a professional 30-year bond trader who, he had been trading since the pit days. And so, he had been doing nothing less than, $1 and $2 million positions. Those are like normals, positions for him. So, it was just a time period for me to really become a sponge and train and absorb as much as I possibly could.
Mm-hmm. Interesting. And so I just want to get back to how you would have done things differently if you had to go back from the beginning.
Great question. If I could have done things differently, I would have done everything that I teach in my ATM course. So my ATM course, Advanced Traders Mindset course, is 16 years of trading in the markets. It's 20 years of studying neuroscience. So neuroscience was, my specialty and what I studied at the university, particularly human learning and memory. How do we learn? How do we improve our brain? How do we improve learning models? And so I use that and plus my yoga meditation to kind of create these training things. But it made me realize, part of the reason why I had so much success in the beginning was because my mindset was super strong at that time. I was doing kind of a very intensive meditation practice at that time period. And I think because of that, it mitigated, my mindset was confident and strong so that it mitigated any sort of combination of lack of skills that I had in the market, but any like psychological issues or limiting beliefs that would normally interfere with trading. And so, if I could have done it differently, I would have trained mindset first before I even really touched the markets. I would have trained specifically, how do I need to think, act, execute, and be for me to be successful? Because I could have a great strategy and that can pull money out of the markets year over year. But if I can't pull the trigger when I need to, or if I can't, close the position when I need to, or if I don't know how to mentally execute, and I don't mean like intellectually, but if I can't mentally execute, because of fear or doubt or all these other things, it does not matter what your strategy is. You will not make money trading. And so if I could have done everything differently for myself or any of my students and reset the clock, I would have trained mindset first and learn how to think successfully from the beginning, around trading. Because then that will ensure the right mindset and proper mental execution as I learn the methodologies and strategies.
But is it possible to learn the right mindset before trading, or you have to trade to learn the mindset?
Sure. This is a great question. So you're asking, hey, can we learn to be a successful trader without the experiential knowledge or insight, that you're going to get from trading? Mm-hmm. And so, yes, you can. you can learn probably, if I had to estimate, anywhere between 75 and 80% of the mindset you need to make money trading. You can learn that before you actually touch the markets, before you actually make a single trade. That's why certain people, when they come to the markets, tend to start off better than others because of experience, because of things they've gone through in their life that allow them to relate to this a little bit easier. I didn't have any experience in markets, economics, or finance or anything. I didn't take one business class in college, not one. I was doing neuroscience and Asian philosophy. So, I was liberal arts. And so with that being said, I didn't have any experience about business, finance, or markets before touching the markets, but I had certain skill sets and I had a certain mindset and experience that allowed me to do well for a period of time. So yeah, I think you can. I think 75 to 80+% of it can be learned before you actually touch the markets. And then after a certain point, you'll have to get some experiential knowledge. But believe it or not, the experiential knowledge will never be as, how could I say, important as having the right neural networks, wiring your brain to make money trading, and to have the right mindset. And so those things can be learned later, and you can work on them in very specific ways.
And how exactly do you train the brain to be able to make money trading? Are there like steps or a process you have to follow?
Absolutely. So if we think about the brain, and if we look at the evolutionary history of our brain, and just us as a species, our brains are not wired right now. We're not born with, and we're not, you and everybody else that comes to the market, by and large, our brains are not designed to be traders. It was never part of our evolution to look at charts, push buttons, look at numbers, and make money from that. Our brains today are relatively wired as if we were living 100 or 1,000 years ago, which is much more fight or flight, or kind of a survival type mechanism. And so we have this thing called a negativity bias. And that is our brain right now, your brain, my brain, everybody who comes to the market's brains are primed to react more strongly to negative stimuli versus positive ones. And that's because negative ones often represented threats to our lives versus positive ones. The problem is that even though our lives are not as much of a threat today as it was, say, 100 years ago, if you look back 100 years ago, about 1 in every, 8 people were dying due to some sort of physical threat. But today it's like 1 in 100. So the physical threats to our existence, 100 or even 1,000 years ago are way stronger and way more impactful than they are today. But our brains still haven't caught up to the environment that we live in today. We still have, to change an evolutionary history of the brain takes hundreds, if not thousands of years. So with that being said, our brains have this negativity bias. That means that you're in a trade, you're long, whatever, and every pip the market moves against you will create a neurological stronger reaction to your brain than every pip that it moves for you.
Mm-hmm. Loss aversion, right? You fear more the loss.
Yeah, this is exactly one representative of it. Loss aversion is a representative of that neural network wiring and that neurological wiring that we have, this negativity bias. And there's many other things of that, so it's not just loss aversion. There's many, if you think of most of the, aversions or neurological reactions we have in trading, they're all centered around the, confirmation bias. You look at all the biases, confirmation bias. Confirmation bias is looking for information that supports our theory versus things that threaten it. Because if it's threatening, then it somehow represents this physiological and existential threat to us. That's why we experience losses, so differently than we experience wins. If you were to scan the brains of, 1,000 traders and over 1,000 trades each, if you were to look at the neural networks that were lighting up on a win versus a loss, it's not even close. We have anywhere on average about 7 times more neural networks and neurons dedicated towards registering the negative versus the positive. So as long as that's in place, you're going to have this confirmation biases, loss aversion biases. They will be dominant and they will affect your trading. So how do we change that? That's the key question. How do we rewire our brain for success in trading? Well, remember how I said before, our brains are not wired to make money trading? Do you remember that part of the conversation? The good thing is that in a twist of irony or paradox, our brains also have what we need to make money trading, and that is neuroplasticity. And so neuroplasticity is the ability of the neurons and cells to change and adapt and evolve based upon experiences, based upon mental activity. We used to think the brain was relatively fixed, IQ was relatively fixed. That's all a lie. It's all wrong. The brain has the ability to evolve and adapt to experiences. And so there are two main forms of neuroplasticity. And one of them is called SDN, which is self-directed neuroplasticity, and one of them is called EDN, experience-dependent neuroplasticity. So self-directed neuroplasticity is underlined by or described by this statement, which is that passing mental states become lasting neural traits. And so what that basically means is that the things we think about regularly while trading are going to build and create neural networks based upon the content of what's happening in our mind stream and our cognitive activity. So if we're constantly fearful while trading, then we're going to wire our brains to be more fearful. We're amplifying that negativity bias. If we're constantly experiencing confirmation bias, then those neural networks will become stronger. The brain will change over time. And not just physically, but chemically, because you need neurotransmitters. You need chemicals to actually produce neural signals. So that is one thing. And then experience-dependent neuroplasticity, you can think of this as neurons that fire together, wire together, which is basically the things that we constantly experience will produce neural maps and neural networks in our brain. And so what this basically means is we have to change our passing mental states, and we have to change our experiences and interpretations of those experiences to rewire our brain. And so it's a very real thing. We have the studies are very clear. We have brains that can be neuroplastic into your 80s and 90s. You can learn new languages in your 80s. It may seem like it's impossible. You actually can. There's an old lady. There's a great story. She was married to the same person for a long period of time. He passed away, and she felt like, okay, I only got a few years. What do I want to do? And she's like, well, I want to learn how to fly a plane. And so she went to the airport, to train with them. And they're like, at the special private airport. And they're like, you're 80. You can't be doing this. She's like, the hell I can. I can do whatever I want. I can buy my own plane and I can pay for lessons. I can do this. And so they started training her. And then she was able to get her pilot's license. And now she flies around. So, there are things and skills that we can learn well into our later years. And we can even learn these skills even if we've lost brain structures. That's why if you have a stroke, your brain will start to rewire itself and use other regions of the brain that maybe you've lost certain visual abilities or language abilities. Well, it'll take things from other regions that are for sound or for other things and then remap those to some degree to help with your language again. So that's the essence of it. You don't have what it takes based on evolutionary history, but you do have mechanisms in the brain that do allow you to change the way you trade.
So how come then some people are able to learn how to fly a plane and others not at a certain age? Because I guess it's the same thing for trading, right? Some people are going to be able to learn it and some people are just going to not be able to learn it, right?
I think that statement is both true and not true, and that may seem contradictory, but it actually isn't once you start to piece it apart, which is that every brain relatively, unless there's been, major neurological damage or something like that, every brain has the capacity to learn new skills. So the fundamental capacity and ability is there for people to learn how to fly a plane. It's not that there's something about your brain or my brain or any other person's brain that makes it impossible for us to learn how to fly a plane or to make money trading. However, there are always things called supporting conditions and environmental conditions, and there are other various conditions that will make it less or more difficult. Success doesn't happen in isolation. It's not like they talk about finding success as if it's some sort of archaeological thing that you dig up and it's just waiting there for you. No, success is success happens based on a variety of conditions, and it's not like those are fixed. It's kind of like success is a seed, and you may put it in the right soil, but if there isn't water and sunlight, it's not going to grow. Or it may have sunlight, but if the soil is improper or there's no water, it's not going to grow. So just like the seed needs certain conditions to grow, success also needs that. Those conditions aren't necessarily fixed. They're unique to each person, but there are many things which will support learning new skills and success, and others that will make it more difficult. So I think if you look at it, I don't think we can look at it perfectly in a formulaic way around people, like why this person is successful and why isn't. I know certain habits are not going to make things more easy for you, more, the process better for you. And I know things are going to make it worse for you. But it's never perfectly formulaic because people are, we're complex variables, and so it's, the best you can do is create the best conditions possible. And that will, give you the greatest probability of, becoming successful or learning how to fly a plane.
And I think probably one of the biggest indicators for not succeeding is probably the way you view like the learning process or how to learn. Because some people think like from the start that they won't be able to learn.
Yeah, that's a great insight. And that's something that I've experienced working with a lot of traders, is that if you have the mindset from the beginning that this is something you're unlikely to learn or you're not going to be able to learn, then good luck trying to learn that. Good luck trying to be a really good martial artist if you go into it thinking, no, I'll never be a good martial artist. Or, good luck trying to learn how to play an instrument if you're thinking, no, I'll never be able to do that. If that's part of that whole passing mental states creating lasting neural traits, if that's constantly going through your mind stream, that's what your brain is going to wire in, and that's what you're going to be thinking most of the time. Your brain is, your brain will do, and the cognitive activity will follow your most dominant neural networks. So basically, we're doing what we're most dominantly wired to do. And if we're constantly thinking that, then really, at that point, the material that you're learning and the skills that you're trying to learn is immaterial at that point. It's more of the biggest obstacle for you at that moment is yourself. And so, I've never met anybody who is highly successful at what they do and they maintain the mindset from beginning to end, oh, this is something I'm never going to be able to do.
Yeah, for sure.
I've never seen it happen.
Mm-hmm, mm-hmm. I don't think it's possible.
I don't either.
Mm-hmm. I want to go back on risk management a little bit because it's something you didn't have at all at the beginning. And of course, like everyone wants to have the like $80,000 return right away. So how would you go about things if you had to start from scratch and build your account? Like what would be the rules?
Sure. Great question. So in regards to risk management, there's a few cornerstone or pillars around it that there's some staples that you're going to have. And so you're going to have to understand expectancy, edge. What is your expectancy? What is your edge? That is partially related to, of course, accuracy and plus R that you gain per trade. How many times your risk versus or how many times your risk you're gaining on each trade. Then part of it is risk of ruin. I may have an account that I am 60% accurate on, and I may have a certain plus R per trade that I'll make money if I'm risking 0.5% and 1% per trade. But if I increase that risk to 5%, then the mathematical probabilities that I'm going to blow up my account increase exponentially. And so there's some very key issues that you cannot skirt or not learn or avoid, and that is risk of ruin, and that is expectancy edge, and all the things that those entail. The good thing is risk management. If you can do those, then you can generally have a stable equity curve and baseline over time, assuming that you have positive expectancy. But then there are other things you can always drill down to, which is VAR, which is variable at risk. So there are certain risk things that you can measure that are more advanced statistics, but those aren't necessary in the beginning. You have to have those three that I talked about earlier as the foundation. And so if I could have done it differently, I would have, been looking at okay, what's my baseline here? In terms of accuracy, in terms of average plus R per trade, and then what kind of percent do I need to be risking per trade to make sure mathematically I'm going to have a stable account over time? And then from there, I can start to really understand expectancy and edge and profitability. So that's something that has to be understood from the beginning.
And I guess building an account over time all has to do with the maximum drawdown you can have on your account, right?
Well, that's part of it. I've done a lot of studies on thousands and thousands of accounts. I'll probably be publishing that information, I don't know, in the next 6 months or a year, which is that there tends to be a kind of certain yellow and red zone, which is that once your account has gone down X percent, your chances of recovery go down tremendously. And then once it's gone down a certain point, your chance of recovery are next to nothing. This is something that hedge fund managers have realized a long time ago. It's just that, if they have a 50% drawdown, even 40 or 30%, they're probably going to close the hedge fund. Why is that? Because if you had a 50% drawdown, you're going to need 100% return just to get to break even. And most of their income is based on performance fees. So if it takes you 1 to 2 years to get 100% return, you're working for free for a year and trying to live off the management fees, which ain't going to work. So, that is a key issue. But then there's also equity threshold, the psychological equity threshold. Everybody has their own individual level of money that they can lose before they feel like, okay, I can't overcome this. And there's no rhyme or reason. It's totally individual. I've seen guys that once they're down 10, 12%, they won't be able to recover it. And I've seen guys that are down 50, 60, 75% and can recover it. And so it's completely individual, and it's something you have to kind of discover on your own. But there are certain things you can do to just avoid that completely. And so in terms of building your account, getting back to your question, there's many ways you can do this. We had a trader at FXCM, really good trader, that he was consistently taking a $3,000 account and turning it into $10,000. And he can usually do that in 1 to 2 months. And, we're kind of like, okay, let's give him some more money. Let's give him a bigger account. And so we threw at him, like a $200,000 account. And all of a sudden he just started to lose money, and he was losing money and losing money. His accuracy went way down. Everything went way down. Trading just dropped tremendously. And we're all kind of like, well, what happened? And we realized that he had an equity threshold. So if he's used to making $5,000 to $10,000 a month, and his bills are, whatever, let's say his expenses are half that. Let's say his expenses are $5,000 a month and he makes $10,000 a month. Well, if he starts trading position sizes that are now $10,000 a day or a minute or an hour or a week, well, that's going to start activating it's going to really start triggering things in his brain and his mindset and his psychology. Hey, I'm not used to winning and losing $10,000 a day. I'm used to winning, $10,000 in a month. Oh my God, I just lost $10,000 and it's only an hour. How the hell am I going to make all that back? So there is a psychological equity threshold. And so we, after losing a ton of money on that account, we just said, okay, let's put you back to a $3,000 account. And then he proceeded to win money. And I've seen that with a lot of traders, that they have a psychological ceiling, and once they hit that, they pull the money out and then they start back over again. And because of that, they're able to replicate that. Some people that doesn't work. Some people need to build their account over time. They don't have those kind of equity thresholds in the same way. And for them to trade small accounts like $3,000 accounts and then build it up and then withdraw it every month, that also doesn't make sense for them. It's just not something that works for their psychological makeup. So there are many different ways that you can approach it. And there isn't one way. The typical model that everybody envisions is a linear model, that your account should be growing over time, and it has to build an account and grow over time for it to really be worth it. And some part of it is true. If I can make, a 1% gain on a $100,000 account versus a 1% gain on a $1 million account, well, obviously building my account to $1 million has more significance for the same amount of effort. But some people just psychologically haven't built the mindset to trade $1 million account or a $10 million account.
Yeah, so it's probably something you can develop over time, right? like that psychological barrier you can probably go through at some point.
Yeah, it does take, you have to kind of specifically work at it. If you don't do the work, then you won't be able to handle, eventually you'll hit a ceiling, and once you go past that ceiling, most likely bad performance will happen. So you kind of have to stumble upon it, and stumbling upon it probably means having a big drawdown or a big drop in performance for a short period of time until you can realize, hey, this is what's happening. And then you start making corrections. And so, anytime you expand outside your comfort zone, there's always going to be some loss and there's always going to be some messy things to happen. But, if the long-term benefits are worth it, then it's worth those kind of short-term hurdles to be able to kind of expand your capacity.
Mm-hmm. Yeah, this is how you learn, I guess. You don't really have the choice.
That's how all learning is.
Mm-hmm.
All learning is expanding beyond our current state of knowledge, wisdom, experience, and even neurological structure. Neurological structure, to learn new things, requires new structures, new connections, new chemicals, and that is, it's never a fully comfortable process. It's never, going to be, learning is never going to be like, every time you learn something new, it's going to be like getting a great massage or something like that. It's not like that. It's uncomfortable.
Uh-huh. Any other lesson you'd like to share with the audience that you got from your 16 years of trading?
Yeah, which is that, we've talked about wiring. We've talked about, we've talked about how it's critical that you don't have what it takes and do have what it takes, and you have to really wire your brain for this, which is, I see a lot of traders underestimating the mindset. We are able to look at our members and see what lessons they're watching the most and which ones they're watching the least. It's good feedback for us. Mm-hmm. And the lessons that are watched exponentially the most are the ones on strategy, the ones on charts, the ones on technique. And the lessons and videos that are watched the least are the ones on risk and the ones on mindset. Mm-hmm. And you have to flip this equation. And if you think about it, you can kind of break down successful trading into a triangle with 3 points. 1 point has to be the technical skills. It could be fundamental. If you're a fundamental trader, then it's the fundamental skills. It really doesn't matter. But there has to be some sort of technical trading type skills. So that's one aspect. Another aspect is proper risk and money management. That's 1 point in the triangle. And without that, you could have a great strategy, but with poor risk management, you're just going to lose a lot of money. The third aspect is mindset, trading psychology. The thing about it is every decision you make, every kind of type of cognitive activity you have, whether it's a trading decision, a technical decision about risk, or just your, trading psychology, it all has to go through the brain, and it all has to go through your mind. It will be experienced directly through your mind, one way or another. It all has to turn into cognitive activity. And so since all three of the things that you need to be successful all must go through one filter, it's unavoidable, well, then you might as well put most of your energy on that filter, because without it, it doesn't really matter. None of that matters. That's why plenty of people know what to do. That's why you hear students say, wow, I knew I shouldn't have done this and I did it anyways. Because intellectual knowledge, conceptual knowledge is insufficient by itself. If it was, then anybody who pirates material would be successful because they have the information, but they're not doing it. Why? Because it's more than conceptual knowledge. So if you want success in most things in life, you generally have to flip the equation of what most people are doing. And if the majority of people in the majority of articles, look at the most popular articles, look at the most well-read, shared articles on trading, the most watched videos, it's all about technique and strategy.
Yeah.
You have to flip that equation. Usually success involves flipping the equation of what the majority of people are doing.
That's totally right. Totally right, for sure. I love it. So I know you have a lot of stuff going on, a lot of awesome things going on. So how can people find you exactly?
Great question. So secondskiesforex.com is where I, teach traders to think and change the way they think, trade, and perform. That's the goal of Second Skies, to change the way you think, trade, and perform. And so, come there. I have a ton of free resources for people who are beginners, intermediate, or advanced. Tons of videos, all kinds of material in there that I write regularly, market commentary. And if somebody's, serious and they want to take this to the next level and they really want to challenge themselves and they have the passion for it, check out my ATM or my price action course. The mindset course teaches you how to think correctly from the beginning so that you can eliminate all the bad habits that you're going to learn and then have to unlearn them. You're going to learn how to think successfully from the beginning, know what to do from the beginning. And then, if you want to learn how to trade any instrument, any time frame, or any environment, that's what my price action course is for. It's the skills there are the most core technical skills you could possibly learn because they can apply to any instrument, any time frame, any environment. And so that's that if people want to really train and take things to the next level, that's what they want to check out. And so that's how people can find me. And I have a contact page that you can send a message and I'll get it personally and I'll respond to you personally. So if people want to get in contact with me, that's how they can do it.
Wonderful. And what kind of goal do you have for the future?
I have, an underlying goal, which is to positively affect traders' lives and minds. And that's not just through financial abundance, but, affect them in a positive way in the rest of their lives. And so I just don't want to create people who become human ATM machines and produce a lot of money. I want to create people who positively impact, their environment and people and those around them. And so, that is my underlying goal that I'm always working on. But we are doing some really cool things. We're about to launch the Advanced Price Action Course V2. So we've remodeled the whole thing. We spent 1,200 hours rebuilding it. We're launching at the end of June 30th. So that is a huge thing. But one of the biggest things that we're doing right now is I'm actually working with a team of developers who've worked on financial instruments and financial products for a long period of time. We're building some really cool apps and technologies that, to me, are going to change the industry. It's no doubt that when these things come out, they're going to change the way things are done. The first technology that we're building, and I can't say exactly what it is because we haven't announced it publicly, but there is one technology out there that's like it, and this absolutely crushes it. It's not even close. And then once that's done, we're moving on to a trading platform this platform, there's nothing like it. Nobody's even talking about it. Nobody's even thinking of you can't even read about people talking about these ideas. It's going to completely change the model of trading platforms. Very much like Google changed the internet. This is one of those things that, if I could trade on a platform, this would be it, but it's totally changing the model. It's disrupting the model of a current platform. And so to me, that is, that's a goal I'm always working on. Is to change the industry in a new direction, in a positive direction forever.
That's interesting. So, Chris, I just want to remind the listeners that all the show notes are going to be on thisartoftrade.com. So if people want to find the link we talked about and find out where they can find you, it's all going to be on thisartoftrade.com. And Chris, I have one last question for you, which is we always ask it to every single guest. And it is, if you could give only one piece of advice for traders, what would that one piece of advice be?
Great question. There's a really good quote by Sir Edmund Hillary. So Sir Edmund Hillary, I believe he's a Kiwi, was the first person to fully climb and summit Mount Everest. And they were asking him, there was obviously a lot of questions, like how did you do it and all these things. And he had this great response, which is he said, it's not the mountain that we are overcoming. It is ourselves. And to me, that is very symbolic and representative of trading, which is that you're not conquering the markets. The markets don't even know who you are. They don't care who you are. They never will, unless, even if you're Soros, the market will always be bigger and, comprised of bigger things. But you're not conquering the market. You're not conquering trading or strategies. You're conquering yourself and your own mindset and your own limiting beliefs and fears and doubts and confidence or lack thereof. You're conquering your own inner obstacles. And when you remove those inner obstacles, when you transform them, when you change them in a real fundamental way, then that's when you'll start to experience not only success in trading, but you'll experience a confidence and a wisdom that can and will last you the rest of your life. And it will be a part of everything you do after that. And so that is my kind of final thing, which is that You're not overcoming the mountain or the market. You're overcoming yourself.
That's awesome. Chris Capre, thanks so much for being on the podcast. It's been a pleasure to have you here. And for all listeners, I'll see you in the next episode. There you go, guys. My interview with Chris Capre, and I was really impatient to publish it. As a bonus, I've been able to talk with Chris and negotiate a good offer for you guys. Chris just launched his new price action course, and I'm really excited because I've been able to get a discount for you guys. This course contains pretty much everything you need to know to succeed. And Chris is a master in price action. So if you want to check this out, it's definitely useful. And I've been able to get a 15% discount for the listeners of the podcast. It's only for the listeners, so if you want to benefit from it, use it. To see all the details, check out thisartoftrade.com/price action, in one word, price action, and you'll see everything about the course. Then you need to enter the code EC15OFF. EC, like Etienne, EC, 15 off. If you have any problem with it, let me know, or check out the show note because I'll put all the details there so you can check this out. As I said, this is really a good offer that Chris is making for you guys, and it's only for the listeners, so I hope you'll benefit from it. And as always, if you have any feedback for the podcast, let me know because I'll do my best to implement it. And on that note, I'll see you in the next episode of the Desire Straight podcast.